Insurance just keeps going up and up and up, and with the cost of living crisis, that helps nobody. What I'm going to do is give you some easy, actionable tips to help you save some money on your insurance. And the first step is understanding the difference between your premium and your excess. The premium is what you pay to be covered by your insurance, and the excess is what you pay once an accident or once an incident occurs and you lodge a claim. There's an inverse relationship between these two, meaning an opposite relationship. So if you select a higher premium, it normally results in a lower excess, and the other way around, if you select a higher excess, it normally results in a lower premium. What some people do, and if you're really accident prone, some people like to pay a really high premium. So when an accident occurs or when an incident occurs, they pay almost nothing or a very low excess. That could help you psychologically, could help you sleep at night, but it doesn't really save you any money. A good way to save money is to have a lower premium, a lower monthly payment, and a higher excess. This can be really good if you're a really cautious person like I am. My wife often says I drive like a grandpa. But even if you're not an overly cautious person, it still could be a good idea to pay a lower premium. Have a think to yourself, how much do you actually make a claim on your insurance policies? They're normally very rare. Having a lower premium and a higher excess keeps more money in your pocket. And then you would just pay a higher excess when you actually make a claim. People like Scott Page, the Barefoot Investor, recommend having a savings account of $2,000, putting that away so you can't touch it at all, and then increasing your excess to $2,000. So if an accident or an incident occurs, you have that money sitting there ready to go when you need to pay your excess. A $2,000 excess is a fairly high excess. Something that would be considered a lower excess is around probably the $300 to $500 range. And the insurance companies actually take your money and invest it to make further money. So perhaps consider paying your premiums on an annual basis rather than a monthly. You normally get a bit of a discount for doing this when you pay annually, and you get this discount because the insurance company is getting all your money up front, which helps them with their investments. When there are natural disasters, these are really sad for the people involved. Unfortunately, what happens is because the insurance companies lose a lot of money on these type of events, they normally try and recover or claw that money back from everybody. So you might not even live in a flood zone, for example, or might not have even been impacted by a natural disaster, and you'll find that your premiums increase. And this is purely because the dodgy insurance companies are trying to recover their losses. So that can be really annoying. Keep that in mind. Once you have your premiums and your excess all sorted, for things like home and contents insurance, particularly contents insurance, you should have a look at the type or the dollar value of the contents being insured. What happens is that each year, the insurance company will automatically increase a little bit the value of the contents to be insured. And this actually increases your premiums because you're insuring a higher value. Now, they do this to say, you're buying more stuff each year. We want to make sure that these things are covered. And that can be all well and good if you don't like to think about it. I'm a little bit cynical, so I just think they just want more fees. But reconsider this every year. In the unfortunate event if your house was to burn to the ground, how much money would you need to replace the contents inside? Think of the essential things like, beds, clothes, TV, couch, fridge, those sorts of things. A lot of the rubbish we tend to accumulate, I wouldn't want insured. I wouldn't replace it if it burnt down. So I look at this number each year when I get my insurance policy, and I normally move it back to the value that I'm comfortable with that could replace the main items should a house ever burn down to keep our lives going. And make sure you shop around to find the best deal. Sometimes you can get discounts as well if you bundle 2 or 3 insurance policies together. Use some internet sites. Sometimes those comparison sites are not the best though. They are simply just sales tools for insurance companies to sign up to. So try and use a few different resources to find the best possible insurance policy and the best possible price for you. And the reason I'm sharing this with you is I just got my insurance renewal policy and I was really angry to see that the premiums had gone up for no apparent reason at all. Naturally, they're trying to recover some of their losses from the natural events. So I'm going to do the things that I've just talked to you about in this video. I'm going to review my excess and increase that where I have enough savings to do so. I'm going to look at my contents covered. They would have increased that. I know they would have increased that, so I'm going to bring that back down. And then I'm going to get maybe 1 or 2 other quotes to make sure I'm getting the best price. And one kind of cheeky thing you can do is go onto your own insurance company's website and get a quote from them like on an anonymous basis. You'll be surprised, sometimes they'll offer you a cheaper rate because you're a potential new customer. If the rate does come out cheaper, get on the phone and start negotiating. Quick disclaimer, I'm not a licensed financial advisor. You should seek the help of a professional before you make any changes to your financial position. I hope you enjoyed the video, and if you did, I would certainly appreciate if you punch that like button. It will help push it out to other viewers. And if you have any insurance wins, you have any victories, let me know in the comments below. I'd love to hear about it. Until then, see you in the next video.